Yo, 365, shake my hands, ladies and gentlemen. Good afternoon, good morning, good evening, wherever you are, whenever you are, whatever time and space you're in. I hope this finds you well. This, believe it or not, is my fourth attempt to put a video together for you in the last 48 hours. Every time I go record, my little girl wakes up, she hears that I'm no longer in the bed, finds me in the house, and just opens the door. So I'm hoping that this will go smooth. Because of that, I'm also going to try and be as quick as possible. Kind of apologies, by the way, for disappearing you guys for about almost a month, right? Just under a month. The first week, both our nannies stole from us. We had to let them go. The second week, the biggest national arts festival in Africa is always hosted in my town, Grahamstown, the National Arts Festival of South Africa. So we enjoyed that. After the National Arts Festival, we got sick with gastric fever, which is spreading like a wildfire in the town. And we're pretty much out of, in bed for the last 2 weeks, give or take. My firstborn is back at school. He missed about 2 weeks of school, but my 2-year-old is still sick. And we actually haven't made any type of moves looking for a replacement nanny or a house cleaner. So it's just been crazy. It's really been crazy working from home, hardly working, to be honest with you. Right, so I looked at the markets, guys. Next week, we've got a big Fed meeting. It's almost pointless to do a war room. Let's first get direction, all right? You know me, I don't like guessing. I don't like gambling, right? I will be putting together a holistic take on the market for this coming war room on Sunday, right? It's going to be a bigger, better narrative where you can position yourself in the markets, right? Not really that excited yet about giving out signals and trade calls because anything can change, especially if we get a Paul Volcker rug pull, which will be my next video on the YouTube channel this weekend so that you can just really understand what's going on. But I thought, well, let's do an education video. When last did we do a strong, good education video? If you look to, the little pop-up on your screen right now, right there, there is a video I did on EURUSD called Scenario Analysis. Let's call that video part 1. Please right-click on that little pop-up right now, open a new tab, and watch it after this video. This is going to be part 2. All right. I really want to get us trading, as efficiently as possible for the next 6 months, right, into the final, the last few months of the year. Summer markets are upon us. Let's get this thing going. Right, so I've got EURUSD, my favorite go-to pair. Why? It is about a 68% contributor to my annual profitability. I know this because I keep data on myself, right? So this is my money maker. Right, out of all the Forex currency pairs, this is my money maker. So I know this, I master it, I study it, and I keep evolving. I keep adding more assets to that arsenal. But EURUSD is my money maker. What I'm going to do is I'm going to come to EURUSD. Right, let's quickly do a sweep. Right, you guys will remember about a month ago I told you, please do not be in a rush. Please don't be in a rush to buy this asset. EURUSD is bound to stay weak, right? And I'm pretty sure people were thinking about this first demand here. I cautioned against it, literally on live, on video. I cautioned against the second demand as well. And then I think I told you guys that we live in a world where this thing can eventually get to 60 cents, right? And I'm pretty sure till today, no one really believes me, but this is where EURUSD is going, all right? So somewhere all the way down there, right? Something crazy like that. And time will tell, time will tell, we shall see, right? But before we get all the way down there and get excited, there are many other levels, that we need to deal with, right? But the point is, right now, EURUSD has fundamentally removed a big historic demand towards a recovery demand of the COVID 2020 levels, March of 2020 over here, and then removed, the bigger backup demand, right? And has finally, found a softish, weird landing space somewhere down here. If you go to the weekly time frame, you will see that price is actually reacting to a weekly demand, or has been, for the last few weeks, right? So please just bear that picture in mind. We are breaking structure. We're breaking higher time frame demands. We are continuing with our 1-month-year-old analysis that EURUSD needs to tank, right? And that's happening. They're removing institutional demands, right? I saw on the tape ECB is starting to consider becoming more aggressive with its interest rate hikes, right? But like all Reserve Bank governors across the world, yesterday South African Reserve Bank governor increased the repo rate. Everyone is behind the inflation fight, just like every other crisis, right? So we'll look at this thing at the weekly, right? I'm going to go back to my monthly time frame because I really don't want you to be confused, right? So the point is we've got two massive broken, governing demands, and we've landed, in between, hopefully what could potentially be a strong leg for Euro USD, right? But that being said, on the way up, where is price going, right? Remember, price is everything. Price is fractal, right? Price is everything. Price is fractal. Price is in everything. So we need to understand where our markets going. If markets were to go back up, if that was your analysis, your thesis, your technical analysis, if you had all the arguments in the world saying, look, markets are going back up, my question would be, well, how far up? And the answer to that is obviously, where are the institutional supply and demand levels on the charts, right? And to me, once again, I am looking at a very weak asset that continues to fall, right? So now that I know that, there've been key demands taken out on a governing time frame, and we're bouncing off the latest, right? And every time there's a slight bounce, sometimes you get 1 month green. There's a bounce here, 1 month green, right? So maybe this could be a green month, but perpetually it will lead to further, drawdown or further bearish trend creation, right? So long term and medium term, I would like to say I'm still very bearish on Euro USD. That's the start of my analysis. Now that I know all this cool stuff, you would have done a multiple time frame analysis. If you need help with that kind of stuff, I would just advise you to please check out our course. It's a step-by-step process, all the tools of the trade, literally supply and demand, the different types, areas of value. It's in the link in the description down below. Check that out and really take the time to invest in yourself there. Right, but you'd have done all the other things that we cover in the course: multiple time frame analysis, confluence reading, market structure reading, supply and demand, levels, and eventually you would get to the daily time frame. So now let's say you are not a supply and demand trader, or you are a supply and demand trader, but you're still starting. All I've done is I've taken the daily time frame and I've just made it small. I've zoomed in, zoomed in, zoomed in, zoomed in. Why? I want to understand the phase, the market phases, the market structure, the market legs. This thing has got many different names. I'm just going to take a messy line. I'm going to be drawing messy lines. I am targeting something very simple. I'm looking at where there is a higher high and a lower low, so some clear structure, all right? So wherever there's going to be a turning point in the markets and markets come back and break that structure, I want to draw a line there. I'm interested to understand why. I will come back and figure it out later, all right? So I can draw one there as well, right? You can see here, price was coming down, right? Let me just show it to you real quick. Price was coming down, all right? And then later on, this place broke, right? So that's an area of interest. Same thing here. Price came all the way down, came back up, and then broke. That's also a place of interest for me. So I'm just going to do this on the daily time frame, right? A couple of them. And then we shall then zoom out and see if there's anything to this kind of like methodology. Do we see something in particular that we like? Can we apply our supply and demand analysis to it, right? What makes it right? So I've got 1, 2, 3, 4, 5, 6, 6 clear, breaks, right? 6 clear continuous market structure lows being created. 6 clear phases in the markets where the downward cycle was maintained. This is not crazy. This is not rocket science. I am the same guy who has been telling you to sell Euro USD since last year. All right. So this is just literally, you can see the first market structure phase is from the 15th of March 2021. Since last year, this thing has been consistent. One good sale here or here or here or here or here or here could have been one of your greatest paydays. And this is just one asset. And you've seen me tackle Euro USD continuously in the war room. We've been looking for sell structures. I'm getting to scenario analysis, right? I'm getting there. Right, now that I've done this, I need to make my lines neat. I need to kind of like give them some coordination. Not only that, but remember, I only trade supply and demand because I enjoy trading with the banks trade, because those are high probability areas. So it's not enough that there's a line, right? It's not enough. Maybe if you think I'm identifying support and resistance, that's not what I'm looking for. I was simply looking for a break in market structure. Now I'm going to find the key areas that are in line with these breaks to see if my strategy could have benefited me in the long run, number one. But number two, if it could have benefited me in the long run in the past, I can then use that back test to project how to move forward in the markets so that it benefits me now. Keeping it simple, keeping it, very, very simple. Right, so now I believe this is the first breakup structure that we identified, right? The simple market leg here, the market's kind of like stopped there, markets broke through, created a new one, markets went up, failed to go higher. All right, so this is like just old school, simple market information, right? Higher highs, higher lows, right? So this high here failed to surpass that high, which was the beginning of a very big downtrend, right? So you've got a big high here, and then all of a sudden you start to have a lower high, right? And you're like, interesting, right? And at the same time, markets are creating lower lows, right? It's still not enough information to take a trade. What I then need now is to make sure that I can find a supply that will correspond to pushing price down, because a supply is a unique area in the charts where they put money to sell, whereas a demand is a unique area in the charts where they put money to push price up, right? So, but I have to start finding the break-in structure first. Okay, I absolutely have to first find the break-in structure, which seems like we've done a good job at doing. Right now, I never trade across candlesticks, so my first area of interest is going to be somewhere over here. I'm going to be switching between normal candlesticks and Akini-Hashi candlesticks, because Akini-Hashi candlesticks sometimes give me a better volume read, right? So let's do that right now. So the very first breakup structure, which would be this line here, is telling me that something interesting is happening at this level. And if you look to the fulfillment of the right, you start to adjust your candlestick formation, which is drawing a perfect area of value. You put in your simple proximal line, which is where you would have entered, and your distal line, which is also known as your stop loss, right? You'll notice that you received two perfect entries into the supply here. So this would have been the first time you and I should have been taking this trade, which we did last year. We came to the wall. This is we're just quickly reviewing and breaking down Euro USD. I pray to God that this gives you a value, right? Educational value, because this will play out a million gazillion times. Now I've removed that first breakup structure line that I had. I don't need it anymore because I now know exactly what it was pointing to. The structure here that existed, right, was not broken by magic. I want you to get this. It was broken by the power of the supply in there, the sell orders. The only thing that moves the markets is money lopped or supersided to one end in an uneven seesaw. Either the seesaw is up here and we have a supply that's dominating and demand here, or it's the opposite, right? You've got a demand at the top and a supply at the bottom. And in this case, supply is dominating. Supply means sell, therefore pushing price down. Therefore, we expect to see break of structures to the downside. Okay, hope that's very clear. Right, so we've got this very first supply here that does the most break structure, pushes price down. The next one that we can see we drew earlier on is somewhere here. If I look to the left and you come take my course, you will realize that there are about up to 8 different types of supplies and demands. And all of them have a big difference in how you draw the areas of value, how strong those areas of value are, the uniqueness of the different types of supply and demand. You can switch to normal candlesticks just to see what's going on, right? Because you really want to get a very good, clean OB. OB means order block. And you can see here, there was a bullish engulfing pattern, then a 365 candle in there, beautiful imbalance, reached, as price leaves this area, markets come back, which will be when myself and 365 students would have entered. Not any other time sooner, right? So you got at least one good sell position going on here. The strategy is telling us that the next time to have entered this market, when it was safe, reliable, and a guaranteed moneymaker is there, right? I literally, if you've done my course, there is nothing new I've added. This is still module 1 and module 2. Module 1 specifically, you got to master those basics. Those basics are the things that are going to grow your capital, right? Then we've got a new breakup structure here that we drew in a rush earlier on. Remember, we drew these lines when everything was, zoomed in. So now we need to kind of like, neaten this kind of stuff. And one could argue that actually the better breakup structure would be somewhere here, this week's rejection. I don't mind having it there as well. It really doesn't make too much of a big difference. And you can see markets tried the best they could to reach these levels. And sometimes, these things happen where price just literally doesn't make it back because of what we call competition, right? There's a lot of sell side momentum going. Everybody's dumping. But one could argue, right, that there is an unfilled order block somewhere in this area. I'm going to mark it white. Why? It hasn't been used, hasn't been tested, right? So I don't want to confuse it with areas that have been used. But I'm going to quickly switch to volume-based candlesticks just to make sure we're getting a good read of all these levels, right? So volume-based candlesticks would force me to draw complicated 365 candles, which is perfectly fine. And this is what they would look like, right? I would still agree that the breakup structure is right over there, and you can see for yourself, right? So now markets drop, beautiful imbalance leaving that white area of value that markets don't return to. And then we have a specific area of value we talk about in our course called an original turn, and a turn that happens without nothing on the left to cause it, right? I don't mean to teach, but you need to understand the things that you're looking at. This original turn is a banking decision, right? It could be a fundamental shift. It could be an interest rate. It could be something on that particular day, right? There's no time now to research what happened on the 19th of January, right? But in this moment in time, a supply was created, right? A very tricky supply because they actually made sure to come back and hunt anyone who knew what they were doing. So depending on your stop loss placement, you were hunted for here. Let's go back to our normal candlesticks just to keep it 100, right? So there we go. Now I'm just going to draw a zone. The way we would have drawn the zone, we've got a bearish engulfing pattern there. Very beautiful bearish engulfing pattern. You can see it in there, right? I'm going to make this yellow because this not only happened but worked out, right? And then we do have a nice healthy stop loss hunt right there, okay? And believe you me, I probably would not have been triggered here because of just how close a higher supply was in that proximity. So knowing me, and you've seen me do this in the war rooms, I would have simply waited up here and ended up not being triggered. But as a swing trader, you know that the eighth wonder in the world, the greatest eighth wonder in the world is compounding. That means your first two trades are still running undisturbed, right? Trade 1, trade 2. By now, you should have started moving stop losses to lock profits, blah, blah, blah. And you're waiting to get tagged in this magic box here, which doesn't happen. BTM traders, maybe ICT traders who use a market execution function could have easily entered here, because what they like to do is they like to sit on the charts and wait. They would have seen markets, look for the stop loss hunt, and then and only then would they have entered. As a supply and demand trader, all you need is a supply. I want to repeat that. You don't have to babysit your trades, but all you need to look for is a supply. So we missed the original turn, all right? Or let's say we take the original turn, but markets stop us out here. So let's actually say that. Let's say here you got stopped out. I think that's an even much more realistic picture. You got stopped out there because markets extended a wick there. That's fine. But the reality is, as markets were doing the stop loss hunt, a supply was created there. All right, that whole area was rebandaged. I hope you guys can see. So the red zone would signify if you took this first trade and you got stopped out. But the reality is that doji candle accompanied by a very big bearish candle, which actually makes a bearish engulfing pattern, created a clean supply to follow through, which actually, if you look at it carefully, worked out. All right, this is all on the daily time frame. This is all on the daily time frame. Work with me here. Markets leave, markets come back. We tag, we go. And as we go, we drew this break of structure. Looking at this area here, one could also argue that the better one to draw is over here, right? It wouldn't really matter to me. In fact, I'll draw both of them right now, just for the sake of seeing exactly what's going on, right? So markets now leave. As markets break structure, we need a new supply that is going to continue the downward trend. We need a new market structure confirmation pattern that will continue creating lower highs and lower lows. However you want to understand it, we need that. And there are rules to how supplies are formed. There are rules to order blocks. If you feel like an opposite candle is an order block, you will burn all the time. That is not a valid order block. There are specific things that have not been met there to call that an order block. The imbalance is not accurate enough. It doesn't fall under a potential continuation pattern type of supply and demand or a value-based turn. It's nothing. It's just a bunch of candlesticks. Nothing would have happened there. The real order block begins somewhere here in this cluster, where they would have trapped retail traders to look for a support and resistance point. You can see that is a good place to set it up, and I'll show it to you right now. Again, makes so much more sense if you're already, not that new to the channel and you know how we trade. But if you are new, welcome. Please do subscribe. Have a look at our course so that these rules are a part of your everyday trading. Right? Why is this a better order block? Well, look at the imbalance. Look at the fact that the selling there actually worked. Not only that, but it is this supply here that breaks the next level of market structure. The supply here takes out an area, a psychological area, and pushes price down. Once again, this is still, where are we now? We are now in March 22, basically this year, right? I don't know what's going on there. Maybe I still have like a fuzzy break, right? So this break of structure now makes sense because it is literally broken. What's a BOS? Break of structure. What causes the break of structure? Supply or demand. There's a supply at the top, multiple touches, all right? But it wouldn't matter as long as you're in, but you be careful. There's a rule. Some supplies and demands can only work once. Others only work twice. For high probability setups at 365 specifically us, we generally never take an area of value if it's been banned the third time, right? So if you'd entered once here and your stop loss is above there, all you have to do is wait for price to give you at least, the possibility of a 1:3 or at least a 1,1, right? Or a 1,5, sorry. So when you get 50% or let me start again, I'm getting excited, right? So if you get to a point where you've got an R&R of 1:2, I generally, for beginners, always recommend breaking even, getting out of risk, not getting out of the trade. No. We know this thing is going down from governor to governor. We know that the monthly supply is pushing price down for the rest of the year. We knew about that. But I'm saying to manage your trade now, biting the pie. How do you eat an elephant? One slice at a time. Once you get to 1:2, to protect your risk side, right? You just break even. It's very simple. And you can see from this supply, and I'm bringing this up because some of us who are rule-based traders would have started to get worried about this supply, because this supply is got what's known as glass effect. It is now too weak to continue being a trusted friend, right? So this is 1:2, almost 1:2.5, right? So as soon as I'm somewhere here at 1:2, right there, I just simply move my stop loss to break even. Then I know I can't lose money off this trade. The question stops becoming how much am I losing and starts becoming how much am I going to keep, which is a very different question based on risk assessment, right? Versus how much am I always losing versus how much am I going to make. If you remove the losing component, and it's always either I break even or I make money, right? That changes, not only helps your trading psychology, but drastically starts to compound your growth. how much am I breaking even from and how much am I going to make is a different conversation from how much am I losing versus how much I'm going to make, right? So once I get a glass effect area of value, so let's say I got triggered here, the markets went down with me, the markets came back up, markets went down with me, markets came back up. The next time I get a clean 1:2, or I feel like, okay, it's safe enough for me to break even because markets have now created a new supply. Right, it's like a bandage. Every time you fall down, if you've got kids, you know that you always need bandages in every single bathroom of the house because these guys fall, they scrape all the time. When an area of value gets a bandage and a supported supply, a supported demand to say, look, man, we know that we've taken 2 dings here to try and push price down. We haven't got to our destination. Where is price going? Destination. Because we need to get to our destination, we are going to add more sell pressure. How do you see that happening? Well, they are going to create a new supply. When they create a new supply on top of a supply that has not yet been broken, you know for a fact that it is a clear sign that, all right, breathe. All right, this trade will go your way. All you need is to be patient. Okay, and so when you get that bandage, you're just looking to break even. You could break even from here and even have a new sell order there. We can see that this new sell order has not been tapped, right? This is still a very, very much fresh area of value, right? So we know one day markets have a plan for this area, right? So now we've identified 2 white zones where markets have not fully come back to tap out the full sell functions of these areas, which is important. That's how markets move in zigzags. There's always orders at the top and at the bottom. That smart money is moving, money through a pot. It's almost like a tennis match. The difference in this tennis match is smart money is both serving the ball from the other side of the court and also receiving the ball on the other side of the court. All right, and they know how they're doing this and the direction they're doing it, and they know that the only thing that gets retail traders is the zigzag motion in which money moves, and the fact that we are extremely not disciplined and not patient, also not knowledgeable about these things. Anyways, this new supply bandaging this elder supply here breaks market structure. You can see it's the imbalance that actually makes it all the way down and tears price down. Right, so when price is then torn down here and we have a new break of structure, do we have a supply? Well, according to my own eyes, I see that. According to my own eyes, I see a beautiful imbalance. Let's go to Akinihashi. I haven't done it in a very long time. Why Akinihashi? Because Akinihashi will always help me draw the area of value accurately. Akinihashi will not let me miss out on that. But also, it also shows you hidden areas of value. Did you notice that this is not there? You see this here? Hey, this is so good, guys. This is a very good video. If you've done my course, this is a brilliant revision session. Look at this there. You won't see it in normal candlesticks. Look at that. It's not there, right? You've got this green candle here, sure, but you most likely would doubt it. But if you go to a Akinihashi, you get a clean 365 candle that markets do their best to come back to, leave, creating imbalance, and then complicated 365 candles come back to complete this sell pattern here. Or not only that, but because I've drawn my Akinihashi candlesticks, I can now draw the entire area of value as accurately as possible. That's one. And then the second advantage is when I start to draw my area of competition, my proximal line, which is always from the wick, right, of the area of value, you can see that this supply not only is used to break this new market structure, which I've moved around a bit, but it is exactly where markets come back to. It is exactly where markets come back to. And this is what a lot of traders on social media would refer back to as a sniper entry, right? Perfectly getting into markets exactly where price is about to turn. And all of that is not based on magic. It's a simple skill set of observation and research to know exactly where the area of competition is. The area of competition where smart money was bidding and selling a lot, like really crazy, was somewhere here between your area of value of a supply and the distance between the area of competition, which is where you'd have drawn your proximal line. And you can see as soon as markets arrived at this area, most buyers get extinguished and got overwhelmed by sell power. All right, so I digress. You wouldn't believe this, but I still haven't gotten to the whole point of today's video. The whole point of today's video, I still haven't arrived at that because I'm stuck breaking the stuff down for you. Right, so markets arrived at this area of competition. We've seen how big this area needs to be with the Kinihashi. If you only use normal candlesticks, you're not wrong, right? Your area of value would end somewhere there, but you might not get triggered, right? Some of you, I remember in the private Telegram group, we're talking about, well, I'm finally glad I now know, thanks to the course Market Understanding, I understand the direction of price, I understand what's going on, but sometimes some of the greatest trades that I mark up, I don't get triggered. I'd encourage you, switch between normal candlesticks and Kinihashi, right? Just kind of like see the actual area of value, see where they're waiting for you, right? So markets come here and then make a tap. Do we have a supply here? Do we have a supply? Do we have the possibility for us to call this area a supply? And my answer is, well, of course, right? We've got a beautiful, interesting bearish engulfing pattern. That's all we need for an imbalance. That's what we're looking for, right? Markets are playing, a slide game, right? Creating a small area of value just above a very big one, right? But just like the one above, and this is becoming a common thing here with EURUSD, and here you see this dodgy candle that broke a supply, and then they created a bearish engulfing pattern to bandage the area, because remember, they have to repair these supplies if they want price to keep going down. It's a downtrend that they're creating. It's not a downtrend for this week or for 4 hours. It's it's called a positional position. It's a long, I'm talking months, weeks, years. It's a positional trend that they need to take care of. And so we get the same thing here, a very small, weird looking bearish engulfing pattern, multiple hits in the zone, and then markets come back and reaffirm their commitment to the downside right there by adding more sell pressure. And I don't know what Kinihashi will show. There you go. There's your doji candle. That's exactly where it ends, making contact with this first level here, and then a beautiful imbalance to the downside. So we now know that this supply is most likely going to lead the way in breaking structure. How are you trading these things? Are you taking them area of value as they come? Maybe, right? I can tell you something. I can tell you that if you had your first trade running from up here and then you broke even, then your second trade running from up here and you broke even, and you missed this one and you lost some money there, right? And then maybe you caught this one, or maybe you didn't. It doesn't matter. You still have 1, 2 trades running, and then this is an obvious must get. This is trade number 3, and I'm just looking at simple module 1 trade setups. This is how you should be trading these things. And if it's hard for you, create 2 accounts. Traders, I'm not tired of asking you to do this properly, but I am getting worried about why you are not. The problem isn't the markets. The problem isn't the strategy, right? This is some introspection work that needs to be done. This stuff is right there in front of you, right? So if you've got a swing account and you put decent amount of capital and you trade low risk on that account, and you tell yourself, this is my swing account, I only take perfect long-term positions from a daily time frame perspective, and I just hold, I follow the trend, I hold, I will see this account's withdrawals at the end of a year, 365, 365 days, and you have another small account where you're intraday trading, where you're buying and selling like a crazy person, which is actually a bit schizophrenic, right? Because you're going to have 2 trading personalities, which sometimes is difficult to master, especially if you're a beginner. I always ask people to start off swinging. Everything else in your life takes time. Everything else, your job takes 4 years to pay you, 10 years to promote you. It takes time. Your university degree takes 4 to 5 years. It takes time. You are built as a swing trader psychologically. It's just that the greed of the markets, the stupid lifestyle stuff of the market has you believing you must be a millionaire overnight. But if you're to align yourself with your everyday habits as a human being, everything else in your life takes time. And if you're to allow the markets to do this with you, you should be fine, right? So this will be your 3rd swing trade, while the other 2 at the top, they are moving, right? Here, I guess, it's very difficult to judge what kind of a trader you would be. But as soon as I see a branching off pattern, you guys know I enter, right? As long as I'm in line with my structure and my trade, I'll enter. So for me, if you had mastered my module 1, you definitely should have a 4th position here. And sometimes I miss trades. Sometimes I'm busy. Sometimes I'm not paying attention. I understand that. Here we're back testing our rules and we're building a model to follow for the future. Right, but with 4 trades entered in the markets, right, there's no ways your small account cannot grow. With trade 1 all the way down there and bagging about 1,300 pips, whether it's at 0.01, 0.10, 1 standard lot size, this is a lot of money. This is how it works, right? Some of you have, if you cannot hold a trade for a year, I worry for your retirement. How are you on earth are you going to save up for your pension? Do you have life insurance? Do you have home insurance? Are you saving up for a home? Like, if you cannot hold a trade for 4 weeks, 6 weeks, what's your perspective on money? How are you even investing stuff? It's crazy. But I'm simply saying, just on one asset from the 21st of September, if you missed the 30th of July in 2021, all the way to wherever we are now on the 9th of June 2022, one asset has given you about 1,300 pips on one position. But you've got 4 trades differently. So you've got trade 1 is 1.3 plus trade 2. Trade 2 won't give you 1,300 pips. It's going to give you a little bit less. But you get my maths here, guys. Trade 1 is giving you 1.3. Trade 2 is giving you about 1,000 pips. So now you've got 2,300 pips running. Trade 3 only took it from here to where you are today, has given you 470 pips. That's 2,000, give or take 700 and something pips going. That's money growing. It's just growing. You do your part. You show up on Sundays. When I show up on Sundays, we look at the charts, we do warrants, we set and forget. We risk accordingly because we know that overall, in a period of clusters, as long as our strategy remains true and supply and demand hasn't changed for hundreds of years, Milton Friedman's book on capitalism is based on analyzing price, capital's price on supply and demand. Supply and demand determines macroeconomics. It is how we get the price of bread, the price of a car, the price of a farm, the price of sex. Right? Prostitution is also based on supply and demand. It is how you evaluate whatever you deem an asset or a product or a commodity that you want to buy. It is a simple concept. It is applicable everywhere. So now here's trade number 4 going on. Remember, we entered somewhere in there. A bandage comes in. Beautiful imbalance. What do you think is going to happen? A lot of pressure happening here. We get a break of a structure being formed, and eventually a break of structure somewhere there. And we have now arrived at where price is today, folks. Now, given everything that I've just shown you on the daily time frame for Euro USD, is it not interesting to think that every time it seemed there was a break of structure, there was a supply close by? Every time I've shown you there's a break of structure, we've gone to check the nearest supply, which will lead the next break of structure. Would it not be prudent then to draw an area of value, for example, here, number 1, and say, this is a potentially interesting place to be. It's a supply just above a break of structure. It is the last supply that the charts created just before markets broke through. This supply broke structure. Is it not possible? Do we not live? Is it crazy? In the world of probability, would it be insane to assume that maybe we might get a good 5th entry here? That maybe this is where markets go. And if you don't want to hold this trade forever, if you don't have the faith to hold this trade forever, well, where is the next structure that was formed on the chart? Is it not possible to imagine this? I mean, maybe 2,700 pips is a big pill for you to swallow. Are you not interested, my brothers and sisters listening to me here, for at least the first 465 pips? Is this not a real reality? Right, let's go to Hakini Hashi and dust up that area. Hakini Hashi is telling us that be very careful because this area that you have chosen might not hold. This is a better place to be. So as a trader, I know that everything for me works on a scale of probabilities. So I will risk accordingly. I will say here, high risk area, but I'm still going to take it. Right? Why is this high risk? Because my volume candlesticks are not agreeing with the placement of the trade. Right? My volume candlesticks are saying, well, this is the latest supply that before the break of structure happened, there is an original turn. 365 traders, you can see this original turn was made by a combination, a cluster of complicated 365s. The complete buying before the selling, the pushing price up to sell high, right? And so it deems me wise to also have a sell position here. One of them might fail, specifically the first one. I might get stopped out here, but if I'm working on risking appropriately, I will make that loss and a bit more money up there. It's a simple thing. I mean, if it's been working non-stop since last year, March, what could potentially change right now? Now that we've done this, which is basically higher time frame analysis, all we then have to do is to start to figure out where are we on this part here and this part here, these two supplies that we're looking for on the daily time frame, in line with intraday trading. As an intraday trader, you could be looking to buy the euro up right now. You could be looking to buy the euro up, hoping the euro one day will get to your supply. So I've moved now to my intraday chart, which I showed you how to create, how to build in that scenario analysis part 1 video, which remember I told you guys, right click it, blah, 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 and watch it after this video. I highly encourage that. But I want to make sure that the two supplies where we believe price is going, markets are not random. Human beings in the marketplace are random, but price is going somewhere. We have determined that there was this complicated 365 structure. Remember, I just drew it now on a clean chart. Don't get confused because you're seeing lines now. Now we've just come to my intraday Euro USD chart setup, and this is because I look at this chart on the 1 hour time frame, and you will see why it matters, right? So we've got the supply, and don't forget, we've got another supply here that we say, well, might be a dangerous one for now. And it shows up, where is it? Oh, it shows up here, right? So just below there. So we've got these two interestingly looking supplies here, right? This one at the top is the one that Akini-Hashi candlesticks are urging us to look at more carefully than the second one, right? The second one is just a supply below. We know it makes sense. It's very prudent to potentially, sell a little bit higher when supplies are clustered together. So just so I don't get confused in my 1 hour, time frame, I'm going to make the high risk area red. Red means danger, right? So I'm going to tell myself, well, look, if you decide to sell up there, just sell knowing that there were better sell optics above you, right? There was a better supply above you, and that better supply above you was confirmed by Akini-Hashi, broke structure, blah, blah, blah. Now that I have these two things in place on the daily time frame, I have to show you all of that analysis that we've been doing like this, right, on the data from a clean chart. On my intraday perspective, scenario analysis, right, which is what I do for about 10 pairs that I like to trade, trading them specifically on the London session, I simply move to my 1 hour time frame. Now remember, the red zone is the high risk area on the daily, and the yellow zone above it is the safer one that the Akini-Hashi candlestick is trying to talk me to taking a trade, right? Now let me just quickly update this, and today we won't be counting the pips and all that kind of stuff. We did that in part 1, so that we keep this video short and sweet. I just want to update my vertical axis here and just draw a vertical line at 9 a.m. Why 9 a.m.? Well, that's when the London session started today. And the London session has a tendency to start with very peculiar openings, especially the sessions that start off with very strong supplies or demands. I take note of that. Number one. Number two, remember, the London session is uniquely notorious for creating the high of the day. So if it creates the high of the day, all other sessions will just sell. Or it creates the low of the day, and if it creates the low of the day, all other sessions will follow suit and buy, right? So I like the fact that this is how markets opened today, bearish engulfing pattern, but I have to deep this in all that beautiful reality that we started the whole video with. So just to recap, we started the video on the monthly time frame. On the monthly time frame, we said, well, this demand and this demand have been broken. And then we said, but markets have now arrived at a very elderly, demand, right? And then what I did was I went to the weekly time frame to identify a landing zone, to identify a demand that potentially price could be reacting to right now. Here are the weekly demands that I found on EURUSD. This is how I started, this video. I'm just rushing through the stuff, right? So I noticed that, okay, fine, there's a bullish engulfing pattern here. There's a serious missing cluster. I did the Kini-Hashi stuff just to make sure I'm drawing my areas of value, as accurately as possible. You saw how they look in normal candlesticks. Hurry up, right? But look at how they look now under a Kini-Hashi. That's why my area of value is drawn the way it is, right? So I'm looking at a clean order block, beautiful, strong imbalance, and I'm thinking this might be a bounce in place for EURUSD. A bounce in place, ladies and gentlemen, does not always mean uptrend starting. A bounce in place simply means this is where they might use this time to push price a little bit up before the selling continues, which is what all break of structures have been looking like, right? First you bounce, then you go back up, then you come back down. Now, if you look carefully on this weekly demand, that is where price landed. You see this long wick into my weekly demand? That's what I'm pushing right now. Then we went to the daily time frame, a quick recap, and we identified that, oh, wow. So on the daily time frame, the value-based demand, the bounce to the upside is inside a weekly old 2001, 2000 and something demand, right? And now it needs to push price somewhere to a supply, which is all that's been going on throughout EURUSD. All that's been going on throughout USD. All I'm doing now is collecting all this information, color coding my charts. The green area is the weekly demand where the bounce happened. Cool. The red area is the high risk sell, and the yellow area is where I really want to get selling. The last time I did scenario analysis with you was sometime in June on the Friday of NFP. Would you be surprised after everything that I've told you about how markets move in one direction for a very long time, how it is a trend, that had you taken that trade that I gave you a month ago in the NFP supply, which we saw being formed together, if you watch it again. I know you watched it the first time, but watch scenario analysis part 1 again. Watch me 1 hour just before NFP. Guess exactly how NFP is going to go based on this. Watch the supply, watch the stop loss hunt. Would you be surprised that if you're taking a sell here on this NFP on the 8th of June, I think it was the 8th of June, I could be wrong. There we go, on the 8th of June, right? You would still be in crazy profits from June's NFP to the month of July's NFP. Where's July? There it is there. This just happened a few weeks ago. This is where July NFP was. And you would have exited by the weekly demand as a trader, because you would know that when a demand has been tapped from a higher time frame, markets are bound to reverse. All I am simply saying is one trade idea, 1 month, one good lot size would have taken away all your problems. This is not a video game. This is not a made-up joke. Right, so let's calculate. We looked at how many pips would have made, blah, 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 blah. So now from June to July, just a simple NFP trade idea, 590 pips. Had you waited all the way down, it's about 700 pips. So that's very decent. The July NFP, by the way, if you recall, I made a few tweets and Instagram posts about it. Numbers are good. The job numbers are good, which means the dollar was strong, euro was going to fall. They used the July NFP, this is the power of scenario analysis, to drive the euro down to a demand. They used that NFP to drive price down straight to a demand in 2 days. By Monday, Tuesday, make contact with the weekly demand. You've got a week of schematic somewhere in here. I'll teach that stuff another time. And markets since that day, for the rest of the month of July 2022, have been trying to climb out of the hole. And we have determined where price is going. We now know that somewhere in this 1 hour zone, in the yellow zone, in the red zone, the uptrend will end and selling will begin. Now, all you have to do now is to start to purify your zones. Right. Remember, with scenario analysis and smart money concept, it means you could be a buyer. You could start to look for your demand zones on the 1 hour time frame and start to really figure out the zones that are strong, that are in line with smart money. Remember, the person in control right now is the mayor. The mayor is the weekly time frame. Mayorally speaking, he wants price to go up. Mayorally speaking, the first July NFP has finally been broken, right? The supply has completely been broken, right? Markets are now in an upward stream. Today, yes, markets open with a strong, red order block, but I'm pretty sure we're going to see the end of this either by end of day today, Friday, or even sometime next week. And so you are looking at a continuous confirmation of legs going up. These are like 40, 60, 70 pips, gains to the upside, up until you get to a place where you're ready to take a big risk to start selling. You're going to have to choose a good sell space. This looks like a good sell space. But remember, you're now on the 1 hour time frame. So your profit targets, if you're an intraday trader, if you're a short-term trader, your profit targets are very different to mine as a swing trader. As a swing trader, I am guided. My Moses is my daily time frame. I only do what the daily is doing. I only go where the daily is going. On the daily time frame exists a pattern called PCP. It's a potential continuation pattern to the upside. I know this is to the upside. I know that for the next few days, into what Powell is going to say on Wednesday, this market is trying to go as high up as quickly as possible. Because if Powell vocals the markets, if Powell doesn't give the markets a 75 base rate hike or a 50% base rate hike, but gives the market a full point, all right, a bigger one, 100%, 100, basis point rate hike, right? The dollar is going to be strong, and it's going to be time for the euro to fall. Wouldn't it be beautiful, coincidental, if the euro got to a supply before Wednesday? Stuff to look out for. Ladies and gentlemen, I'm going to end here. I am highly impressed with my little girl. She didn't wake up during this video. I am back. I'll be making tons and tons and tons of lot of videos for you. Look out for the next video this weekend, which is a full breakdown of market sentiment, what the hell is going on, what I think the Fed is going to do, and how to position yourself in the markets. Straight after that is going to be a video that I promised before I got sick. Not your keys, not your crypto. We need to deal with that issue thoroughly. I hope you're well. Don't forget to like this video if you liked it. Don't forget to share it with your friends. Don't forget to subscribe. And I'll see you guys very soon. 365, shake my head. Check out the links down below. I'm out. Peace, everybody.